Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, April 5th, 2023. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, ES, after breaking out from that 4,000 level here, making a move toward the recent edge, not quite as high as the previous quarter's highs or even the quarter before that's highs, but in the vicinity. At the moment, from kind of an intraday basis, 60-minute chart basis, a bit of a head and shoulder type of pattern here developing. Price holding right at support at around 41.20. That's going to be the key level to watch here early today. Does price remain in range, failed new low, pop back up in the range and stay within a 3-day range, or do we start to see a bit of expansion to the downside? If we do see a failure, then the target becomes the previous week's midpoint at 40.60. Perhaps not all in one day, but that would be the target up ahead. So failure to stay above these previous highs and close as well would tend to suggest a snapback toward the previous month's midpoint. So we could be looking at a return as deep as 40.15, 40.10, and that's also right where the year-to-date value is. So at some point here, we're looking for some sort of reaction or rejection that will take us back to value up ahead. All right, let's take a look here at the NQ. Now the NQ has developed a narrow range at these highs. After a Friday rally here, prices mostly remain within that range, just taking out the highs modestly there, pulling back, and now that opens up the midpoint of the previous month's range. So midpoint here, 12.545. That could be kind of the swing target down below for bears in the best case scenario right here, especially if these zones are rejected. Now keep in mind this market here has been quite bullish, especially on a few rotations here lately. The NQ has outpaced the other indexes here and remains the most bullish at this time. So it wouldn't be surprising to see the NQ retest, for example, the FOMC key level from 322 there, which would then lead to another responsive buying push to the upside. So keep that in mind as the NQ continues to remain the most bullish. Now if we take a look here at crude oil has for the most part completed its journey across the range here. One of the things we mentioned before was the strong higher low here and how price needed to not only get back above 70 but take out the 72 prior pivot high, which is also the bottom of the previous range. And in that transition day, the idea was that we are now likely going to go not only to the middle but across the prior range into 80.5 and maybe as high as 82s. So this market has continued to push toward that final target up there. It is sitting at these highs right now, rollover gap here, so a big move up. But 80.5 has been that sticky level all year long, and even into the prior month before that. So here a sticky level, there, here, so anytime it gets too far, snaps back, gets over here, snaps back, and even as far as it got here, it's still back to the 80.5 level. So again, very, very good move across the range, but now we're sitting here at these highs below that major resistance here, and sometime sooner than later maybe we get a reaction, some sort of rejection that will then bring us back toward 72s up ahead. All right, let's take a look now at gold futures. You'll notice gold here has made a move through recent highs here, built up a very narrow wedge type pattern here, failed new low to begin the month, and then a breakout transition day here in the previous session. At the moment, very narrow range here following expansion, 40% of ADR today so far. At the moment, we are approaching levels we don't see often and we don't see for very long. So this is going to be important here to see, can it sustain these levels over the longer term. So if you look back here, for example, you have the 2100 level that comes across right up here. You have the 2050 level right in here, and then right around that 2000 level we just pushed through. And you can see the various levels here of resistance and how high this thing can go, but how it doesn't stay very long before it drops back below 2000. So how is this going to play out in this time? Do we come up here, grab a high through 2100 and then quickly start to rotate back down? If so, that could be the the path forward here. Now pushing through 2100 and finding further expansion would be significant, because now we're transitioning out of this larger range. As of right now, the expectation would be watch for this thing to push higher, watch for reaction or some rejection, and then look to fade it back toward value. All right, let's take a look here at the YM. Now the YM has seen a bit of strength here recently. This higher low right here, failed new low, was tremendous here. Push price back up and through the FOMC key level from March, and then now has pushed all the way back up to the FOMC key level from the first day of February. So February 1st right there, that's the level. And so we snap all the way back to it, and now we're still back into the range where this thing was happily trading for 3 months before. So if this next pullback can find a higher low, somewhere in the bottom edge of this range here, maybe 33K, then we could be looking at a move back across the range toward 34,500 as we stay basically between those two levels, 33K and 34,500. So right now, this market here showing quite a bit of strength here recently, a big breakaway move from the recent FOMC key level. So in the worst case scenario here, you may see a rejection that snaps you back to this level. But on that snapback, can the bulls defend it and push this thing higher? All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.